Hey everyone, welcome back. Hope you guys are having a great Tuesday. We have a lot on the plate today, so it's going to be a pretty long video. I'm going to put the chapters down below for you guys to skip to the ones that you want to see. But here's what we got. We got Binance taking a stake in Core Scientific potentially for some miners Core Scientific is going to be buying. Then we also have Sphere 3D providing their production update for July. We got Bitfarms providing their Q2 results along with Cipher and Marathon today. So we have a lot of numbers to go over. We'll try to make this as fast as possible, but it's going to take a while. Okay. So as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research. And I'm investing in following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. Also, we'll take a look at Bitcoin. Bitcoin and the miners had a pretty good day here. That'll be at the end of the video. Okay, so let's get into the first story that we do have here, which is going to be on Bitmain. So Bitmain and Core Scientific. So Bitmain Anchorage expected to take equity in Bitcoin miner Core Scientific as part of bankruptcy plan. This is actually pretty interesting. There's some good details in here as well. The world's largest crypto mining machine maker is set to take a 54 million stake in Core Scientific as the miner emerges out of Chapter 11 proceedings. This was really interesting to me when I read this. Let's see down here. So Core Scientific will buy 27,000 units of Bitmain Antminer S19 XPs, the manufacturer's most powerful air-cooled model, for 77.1 million. According to the documents filed with the bankruptcy court, the purchase will be funded by 23 million in cash and 54 million in equity in the company once the plan is effective. The transaction reduces Core Scientific's need for new cash by 30 million by paying for the machines partly in equity. Okay, so that's actually pretty good news there. That means they're going to be growing. With them buying that many miners, it gets them to like it adds on to them about 3 point something exahash based on the numbers here. Okay, so about 3.4, 3.5, I can't remember the math exactly, but somewhere around there. Here's some more details. Companies that have lent funds to Core Scientific to buy equipment can elect to either have their claims converted into equity fully or take a secured debt in the emerging company at 80% of the value of their claims. So that's interesting. So they have the option there. Only Anchorage Digital, which had a 29 million loan as of the bankruptcy date, is expected to pick the equity option according to the document. So it seems like they're pretty bullish on the stock price possibly going up and them making possibly more on it. Mass Mutual Asset Finance Borrowings, BlockFi, 36th Street Capital Partners, and Trinity Capital, which together held about 193 million in loans into Core Scientific, as of the petition date, are expected to opt for the secured debt. So they're going to be taking that down 80%. So that's going to bring it down to roughly, what is it going to be? Roughly 160, 150 some million, something like that, for them to pay. The firm is also in negotiations for 55 million equity rights offering for current holders of common stock. So this one's kind of interesting here. Does this mean that people that own currently common stock would get only 55 million equity rights to it? Potentially might be that case. So we're going to see definitely some dilution there. I think they currently have, 300 some million shares outstanding. We could take a look at it here. Let's take a look at it right now while we're at it, while we're thinking about it, before we get too far ahead of ourselves. Yeah, 376 million. So that's basically at $1 right now. You're basically, shareholders are going to be getting possibly 50 some million of that. That's going to be what? That's quite a big dilution there. I'd have to do the math on it. If you guys can do the math on it, take the 50 million some odd shares divided by the 376. And what do you get as far as percentage that's going to be left to shareholders there? So that's going to definitely sting a little bit, I think. Okay. Let's see here. Investment bank B. Riley, which lent 70 million to Core Scientific to fund the bankruptcy costs, will convert the outstanding balance of the loan to a delayed term loan and provide an additional 25 million in new financing. So that's good there. They're getting a little bit more cash to proceed going forward. And then if secured note holders vote to accept the plan, they can receive either the new secured debt at 75% of the value of their claims or equity. If they don't vote to accept the plan, they will receive their prorated share of secured notes issued by the reorganized firm. Okay, so we'll see how things progress. In addition, Core Scientific is negotiating a settlement with lender Foundry, which is owned by CoinDesk's parent company, Digital Currency Group, to fully recover the Foundry's claim, and is awaiting court approval on a number of settlements with equipment and services providers. So we'll obviously have to see how that's going to play out. But a lot of interesting news there. Obviously, good for them to keep growing. Their hash rate has been falling down. We talked about this in yesterday's video as well. And it's good to see that they're going to be going forward. So this all looks pretty positive. For the most part, obviously, shareholders are going to get diluted quite a bit there. Okay, but nonetheless, there's still some equity there for shareholders. So that's a good thing. And then if Bitcoin goes up in value, everything else goes up in value. Core Scientific should go up in value as well. Hopefully, a lot of the investors could recoup, hopefully, what they lost, if not actually make some money on it. So, but that's still a 1 to 2 year time frame on that to happen. Okay, so that's it for Bitmain and Core Scientific. Let's take a look at Sphere 3D's July production update and operations update. I looked through this release. There wasn't anything interesting other than what they actually provided for their operations. So key highlights was 59.8 Bitcoin mined in July, which was down 8% from June and up 367% year over year. Last year, they were at 100 petahash. They're at 1.1 exahash right now. So 11x basically increase in hash rate in a year. Most of it happened obviously within the last couple of months here, but nonetheless, it's still good. Operations achieved 75.2 BTC per exahash efficiency, and uptime was about 80%. They did sell 70.1. They're stating I have it down. I have it a little bit lower than that. Based on my numbers here, mining revenue, Bitcoin holdings now are at 10.2, and they are at 1.1 exahash right now as things stand. Okay, so let's take a look at Sphere 3D on my numbers here. We'll get through that one relatively quickly, hopefully. And here we go, Sphere 3D. So shares outstanding, 11 million right now. Stock price is at $2.24. This was as of today close price. Market cap on this one is 24 million right now. You can see for the past 12 weeks, they have definitely underperformed Bitcoin and a lot of the other miners as well. Now, when you can see their BTC production here has been, well, it's getting a lot better here in the last couple of months. May was their best month, 77 Bitcoins generated. In June, they had 65. They're down now down to 59.8 in July, mainly because of the curtailment. And then you can see the month-over-month difference here on the production. BTC HODL, they did have a HODL of 103 in December, and then they started selling quite a bit here in January. And they've been kind of bouncing between the low teens and the 20s here ever since then. Bitcoin per BTC efficiency for me is at 54.36. I'm using the actual 1.1 exahash and how much they mined for that to get that efficiency. They're probably using the average hash rate to get to that. BTC sold, you can see that they've been selling obviously quite a bit more than what they were mining here. If you look at the numbers here, they sold 73 in May, so they sold a little bit less. 67, they sold more in June than they mined. And then they sold 70 here in July based on my numbers that I have for them. And you can see their hash rate. Hash rate through last year was pretty much at 100 petahash. They increased nicely in December, and in January they were flat for a couple months, and they increased it again here recently, so that's good. Other good thing to look at is BTC mined revenue. It has been coming up, which is good to see. We've had a couple months down because if you're not growing, network hash rate continues to increase. You're generating less Bitcoins per month. Hash rate difference, you can take a look at that, how much they sold in value of BTC as well. And then I've updated the numbers. No, I haven't updated these yet. We're waiting on the Q2 results. When those come out, we will talk about it and we'll cover it then and get these updated as well. Other metrics here, institutions and analysts. I keep forgetting to do this. There's just so many things going on in my head right now with all the miners reporting quarter results and operations updates that I keep forgetting to add this stuff in there. So let's do that right now. So this is for 8/8/23. And we'll take a look at the numbers here really quick before I forget to do something. Oh, there we go. Okay. So let's take a look at Annie on this one here, which is going to be, excuse me. Where's Annie? Let me just pull up Annie really quick. There we go. Annie institutions 25, 38.51, 38.51, 38. Oh, did it drop that much? 38. Let's see here. Annie, right? We got Sphere 3D. Sphere 3D. Yep. 25 institutions, 38,000. Okay, so it looks like institutions have been selling out 25, 38, 51,000. Okay, percentage owned is 0.35. And that should be 10 there. 0.35. So institutions have been selling out of that one, and mainly because of their slow growth. Let's see if we still have any analysts on them or not. No analysts, so everything stays the same here. So that makes it a lot more easier to do. So there's the results for that one, okay? Miners that got installed this past month in July were, let's see here. It was these 100 terahash miners. We installed 1,000 of them to get into the 1.1 exahash. that they reported. They were operating for about 22.65 days out of the month, and the new miners were on average about 20 days out of the month. Okay. Based on all of that, if we look at their current quarter revenue, which should be the current quarter that we're in, which is the estimated Q3 numbers, and then the last 3 quarters numbers, which are Q2, Q1, and Q4 of last year, combined total is about 13.6 million, 50% net income with a P of 5 because not much growth left in them is going to be at $3.08 to 75% net income with a P of 5. We're looking at $4.63. Now, if we take the latest numbers for July revenue, multiply that times the 8 months before the halving, and then the other 4 months at 50%, we come up with 17.8 million roughly. If things stay the same, 50% net income P would be at $4.03. P of 5 at 75% net income would be at $6.05. So definitely an improvement here. But I think there was also something in, where did she, I think it was in the text here. Let's see here. Uptime, CEO comments. There was something that I read that I thought was interesting. Okay, here we go. So this initiative is set to drive our mining capacity up to our target of 1.5 exahash. Once we reach this milestone, we anticipate it will enable us to generate positive operating cash flow on a run rate basis at the prevailing market levels. So if they're going to be basically cash flow positive operating cash flow at 1.5 come halving event, they got to be at like 3 exahash to be in basically at the same spot. If Bitcoin stays where it's at, network hash rate, everything else. So that's definitely a concern here for them, is that they're going to have to pretty much double from where they are right now before the halving event to be possibly still generating positive operating cash flows, okay? So that's it for Sphere. Let me know what you guys think of them down in the comments below. We'll chat there. And as always, the spreadsheet is going to be available to my Patreon members. And let's take a look at Bitfarms reporting their second quarter here as well. Let me see here. There was, do I have this? Did I highlight it? I think I did. Yep, okay. I just want to make sure I highlighted some stuff that I wanted to talk about. Bitfarms report second quarter 2023 results. Here's what we do have for them. I'll get into the numbers here specifically, but here are some updates. So in July, we acquired contracts for up to 150 megawatts of low-cost, eco-friendly hydropower in Paraguay, which is a highly attractive market with substantial potential for development. Based on our experience, Paraguay has among the lowest build-out costs, quickest project timelines to completion, and straightforward importation regime. So that's good there. They're obviously diversified in a couple countries, Canada, US, Paraguay, and Argentina as well. In August, we initiated our deployment plan for a new 50-megawatt farm at Paso Pe in Paraguay with a 30-megawatt air-cooled facility, along with the purchase of 20 megawatts of micro-BT hydro-cooling miners and containers, as we expect to commission this farm in Q1 of 2024. We are introducing a target hash rate of 7 exahash by the end of March 2024. So that would actually be pretty good. That's going to be right before the halving event. And I missed this actually in the announcement that they had a couple of days ago. And here's the announcement from that and what they actually bought. So I added those numbers into my spreadsheet as well, but they reported buying these here. So the micro-BT equipment and miner purchases, they bought 8 micro-BT 2.4 megawatt hydro containers. Those are like the shipping containers that are basically retrofitted for these kind of operations. They bought also 1,920 micro-BT M53S plus hydro miners. These are like between 302 terahash and 320 terahash miners. They operate at like around 7,000 watts. It's just crazy how much those things pull in, but it's supposed to give them about 675 petahash at 28.5 watts per terahash, and miners and infrastructure purchase with credits. So that's great there. So they're not putting any cash out for that. So I just want to point that out as well. Okay, so that's that one. In Rio Cuarto, Argentina, we ramped up production to 29 megawatts and became self-importer of miners to reduce costs and simplify the importation process. So that's great there. To support our target of 6.3 exahash in Q3 2023, we have approximately 7,500 miners en route and in the process of being installed at Rio Cuarto and Baycombe, Quebec. Okay, so that's all good news there. Let's take a look at the numbers that we do have for them for the actual Q2 financial numbers. So if we go back to here and we go to Bitfarms, which is going to be way over here. Where is Bitfarms? There it is. Okay, so Bitfarms has, as reported on their Q2 numbers, 258.259 million shares out. Based on that, their market cap at the current stock price, so today's closing, it was $1.62. Market cap is at 418 million for them. Current hash rate that I have is at 5.3. Future hash rate potentially is going to be 7.8 exahash with everything that's being installed. And I think that is taken into account all of the miners that are going to be possibly taken out. I just want to make sure here. If we go down here, we're not going to get into the numbers. Where is it? Here it is. 7.85, I think. Yeah. So we're taking out some of the less efficient miners. So the 80 terahash, 90, and 91 terahash miners, those are being taken out because they've said that they're going to take those out and replace them with newer miners. So that's based on those numbers here. Okay. That covers that part of it. We already covered their production update for July, so we're not going to get into it. We will take a quick look at their last 4 quarters revenue here really quick. So we can see that the revenue has been coming up here through Q2 based on the current quarter that we're in, which is Q3. I have them down to 32.57 million potentially. If, that's a big if Bitcoin stays where it's at and they don't install any hash rate. If they install more miners, they could possibly get above that. But right now, it's just the way it's looking at as it is. Last 4 quarters operating costs have been increasing. They've obviously been installing more miners, so that's going to increase the costs, so we know that. Cost to mine 1 BTC has gone up though, 16.28K based on my calculations on here for Q2. Bitcoin mined quarterly has been coming down because they haven't been keeping up with the network hash rate increases. But it's kind of hard to keep up with it when the network hash rate has increased like, what, 33% over the last 6 months, which is just crazy the way that that's worked out this year so far. So that's definitely, excuse me, tough to do. Debt to equity, if we look at that, has been coming down, which is good. Current ratio has been going up, which is also good. Okay, so there's the numbers that we saw there. Total current assets are kind of flat, 72 million, and then total current liabilities actually went down to 37 million. So that's good there as well. Okay, now some of the numbers here for their finances. We'll get back into these numbers here in a little bit. We'll talk about those. But here's the main things. Cash and cash equivalents actually increased, so that's good. Trade receivables, so I'm trying to looking for some other things here that were short-term prepaid expenses actually decreased to 2.8 from 13 million, so that's good there. Digital assets increased, which is also good. Tax receivable is about flat. Overall, total current assets increased to decreased 72 million from 73.9 million. So we got a little bit of a decrease there. And most of that is possibly based on the taxes receivable portion of it. Short-term prepaid expenses, short-term prepaid expenses, that went down. That's why. Total assets overall actually went down also to 325 million from 331 million. And let's see here, what else do we have here? That was kind of interesting. Total current liabilities went down to 37 million from 43 million, so that's good there. Total liabilities went down also to 52 million from 59 million, so that's good there. Total stockholder equity is about the same as it was. Increased a little bit here, several $100,000, but not much there. And total liabilities and stockholder equity actually decreased a little bit, 325 from 331 million. Okay, revenue. Revenue has been going up, like I said. They reported 35.479 million. I had them at, what did I have them at? 34.2. So I was off by 3.47%. I don't know why that came up that way, but maybe they were selling at different times or they weren't selling. Not sure. I mean, we have what they reported as far as the BTC numbers are, what the average Bitcoin price was for those months. This is kind of where I should be at, but we're off. We were off a little bit on Q1 numbers as well, but not as much, but we're definitely way off more on these numbers here. So just wanted to point that out. We're still pretty close. I want to be within 2.5% or better. We were a little bit over that. Now, let's see here. Expenses. Expenses, if we look at those, expenses have increased, obviously. Energy went up to 19 million from 17 million, which is normal. You're growing, you're going to be using up more energy, so that's fine. Depreciation, amortization, that stayed pretty much the same. Purchase of electrical components, that actually went up. They've been growing pretty nicely here, so that's expected to come with the territory. Electrician salaries and payroll taxes gone up a little bit. That's expected as well. Then the gross profit, we came in at negative 6 million on it, 17% down. Gross profit minus depreciation, if we take that down out of that, they'd be up actually 15.5 million. And gross profit minus depreciation percentage would be 43.87%. So actually pretty good there. It's a little bit better than it was in Q1. Now, selling general administrative, something I did new here was I added in actually the breakdown of everything that they've been including in that. So that was the 9.15 million. It's up a little bit from the 8.36 million that they had in Q1. But we can see here that the actual salaries and share-based payment has been coming down more or less over the last couple of quarters, which is good to see here. Right, it's at 5 million only and 40,000 compared to 5,157,000. But it has been coming down, as you can see, down these numbers. So that's good. I love seeing that. Professional services went down also a little bit here. Insurance, that actually went up way up, about $1 million up. Travel motor went up just slightly, which is fine. Hosting and telecommunications was up also slightly. And advertising was up about, 120,000 or so. So still not too bad, but definitely like to keep an eye on that one. Then what else do we have here? So let's see, operating income loss was a negative 25 million compared to negative 14 million. And that might be, I'm trying to think of why that was. I'm thinking it was on the depreciation, that's for sure. Because that was pretty much close to what it was. The only thing that was higher, was the 9.9 million here, loss gain on disposition of property, plans, and equipment. So not sure if those were the older miners that they possibly got rid of. Don't know about that one. Okay, but that's kind of what's throwing that off. If you take that out, it would have been pretty close to where it was in Q1. Then down here, total comprehensive income was negative 24 million. They had actually negative 1.2 million the prior quarter, and they had a loss of 10 cents per share with an average basic diluted weight average per number of shares was 246 million. But if we take out the depreciation out of this, and that's something new that I've added also just to take a look at how the numbers stack up without depreciation in there, they would have had a loss of only 3.7 million, down 2 cents per share, whereas in Q1 they actually would have been profitable by about 8 cents. Okay, so that 9 million here definitely affected things. If that wasn't in there, they probably would have been positive on this as well. Okay, so that is it for that one. Let's take a look at some numbers that we do have up here. Custom M1 BTC, like I said, went up to 16.2 thousand per BTC. Debt to equity, we talked about that. Book to value, we talked about that. Revenue. Also, general administrative compensation based on revenue. So that's at 25.8%. It's gotten better. It's definitely been coming down here the last couple of quarters, which is good to see. I'd love to see that come down even more. Okay. And then also down here, tracking to see how much they are diluting. So they diluted about 7.49% in Q2 from Q1 as far as share count is concerned. Okay. So that's kind of where we are at. Overall, pretty good job with everything that's going on here with them growing, things like that. Some of the miscellaneous expenses kind of mess things up a little bit, but overall they are doing the right things, I think, going in the right direction on a lot of these things. But yeah, we'll see how things progress going forward into Q3 for them. Yeah, let me know what you guys think of this. Are there any concerns that you guys are seeing that maybe I'm not seeing? Let me know down in the comments. And that'll be it for Bitfarms here. Okay, let's take a look at the next one. Next one's going to be on Cipher. So Cipher Mining provides second quarter 2023 business update. I looked through this. There wasn't anything really interesting. They did hire, or somebody joined the board. Robert Flatley joined the board, and they just go over some of the stuff that's already in there. So let's take a look at Cipher. Cipher is right here. Cipher, 254.795 million shares outstanding. Current stock price is $3.73. Market cap is at 950 million right now. Definitely pretty high up there. Their performance for the last 12 weeks has been it's mixed right now. I mean, 12 weeks ago, they're up 37%. 4 weeks ago, they're up 29%, or down 29%, sorry. And then also you can see their BTC production here. Let's actually take a look at the current hash rate. Current hash rate is about 5.8. Future is what I have them at 7.3 something right now. And their BTC production has been kind of in the upward trajectory, but it has recently been kind of coming down here. In June was down to 360. They're back up to 418, which is good to see as well. May was obviously one of those events where the network transaction fees added a lot of Bitcoin to a lot of these miners. So that helped those. And let's see here, what else do we have here? HODLs of 518 as last reported. And let's take a look down here. Hash rate has been growing nicely. Revenue has been growing also. There are some months here where it's down a little bit here, maybe because of the heat waves and everything else, contributing to curtailment and things like that. And then here we go. Last 4 quarters revenue. Their revenue has been increasing here, which is nice to see. Current quarter, like I said, same way with Bitfarms, is going to be down a little bit, depending on if they actually grow their network hash, they grow their miners, and depending where Bitcoin goes in value. Bitcoin goes up in value, they're definitely going to be able to beat this, no problem. Operating costs have been also increasing as they have been installing more miners, so that's expected to happen with that one. Cost to mine 1 BTC minus depreciation is at 12.6 thousand in Q2 based on my calculations. Bitcoin mine quarterly, definitely a nice steady increase here over the last three quarters that we have numbers for, which is good to see. Debt to equity is at 0.2142, so that's pretty good. Their current ratio has kind of been flatlined here a little bit, so that's not too bad either. So that's at least staying flat. Total current assets increased to 42.3 million, so that's good. Total current liabilities also increased to 38. Still not too bad on those numbers there. Okay. We'll get back to these numbers over here in a second. Current assets, take a look at, see if there's anything that really changed a lot. The only thing that changed here was cash and cash equivalents is down by about half of where it was to 1.7 from 3.9. And also prepaid expenses is down about half as well, down to 2.2 from 4.2. Cryptocurrencies, so how much they hold, increased a little bit here to 10.5 from 9.5. Derivative assets also increased to 25.7 from 17.1. So their total current assets actually increased to 42 from 36 million. So that's good there. Let's see if there's anything major here that we can take a look at that has changed, and everything pretty much stays the same. So total assets is at 416, increase from 412. So that's good. Liabilities, total current liabilities is at 33 million. 38.695 million. It's up from where it was in the prior quarter at 33 million. Total liabilities, total current liabilities, that was the number. Total liabilities is at 73 million, so that's up from 68. What has really changed here? Not much has changed here. Let's see here. 22 accrued expenses increased a little bit here. And what else was there? Oh, finance lease liability current portion increased by about 8 million or so on that one. So that definitely hit those numbers there. Revenues, we got them at 31.224 million. I had them at, look at my numbers here, at 31.061. So I was off by 0.52%, which is really good. Happy with that number. Okay, so that worked out really well. Then expenses, cost of revenue came in at 15.8 million. So basically about 50% of that. General administrative, 21 million. That's a huge increase there from the 17.4 million that they had. Not sure why. I'm guessing more headcount, but that's still a lot of, I mean, that's an increase of almost 4 million. Per quarter, you're looking at 1.33 million. I mean, how many people did you hire and how much did you pay them? So that's always one of the ones that I always like to look at, like to keep this lean. Depreciation amortization went up also, which is fine. That's non-cash. Expense, change in fair value, went down a little bit here. I'm trying to see if there's anything major here that changed. Power sales definitely decreased. Well, they had a negative 5.6 million. I'm guessing it's power sales. I'll have to figure that one out as far as what that one did. And then total cost of operating expenses went up to 42 million from 28 million. That's definitely a sizable increase there. Cost of revenue came in at negative 11.59 million compared to negative 6. So that's definitely not good there. If we look at gross profits minus depreciation, they're at 49.18%. So that's still good. And let's see what else we have here. Loss before income or before taxes, net gain. We'll just take a look at that. Net gain loss was 12 million.7 compared to 6.6 million loss in Q1. So they lost 5 cents per share compared to only losing 3 cents per share the prior quarter. And if we take out the depreciation here, they would have actually had a positive 1.7 million in revenue, or 1 cent per share roughly. Okay, so that's those numbers. If we look at the numbers up here, like I said, cost of mine BTC per BTC went up to 12.6 thousand compared to 8.6 in the prior quarter. That's just based on my numbers down below. We talked about debt to equity, general administrative, and compensation. So revenue of 21 million, or 31 million, sorry, and general administrative was 21 million. That's 68%. That's way too high. They got to get them much, much lower. It has been coming down, but still, they got to bring that way down. Another probably 40 some percent, if not more. That would be fantastic if they could do that. Okay, and then as far as shares dilution, we're looking at only 2.37% were diluted during the quarter, which isn't too bad. Okay, so that is it. I mean, still based on all these numbers, I think they're fairly valued right now at $3.73. based on the numbers that we do have for them. Depending where things go, how much they grow going into the halving event still, things could change where Bitcoin goes in value, things like that, all can make a difference on it, okay? So let me know down in the comments what you guys think of this one, and let's take a look at the last one that we have here. The last one's going to be on Marathon. Marathon's pretty interesting as well. I mean, they're definitely the big dog right now. I think they even beat out Core right now for the most hash rate installed. And I looked through this. There wasn't anything interesting in here that we don't already know. Nothing that's exciting to talk about. So we'll just get into the numbers that we do have for Marathon, and we'll call it a day. Maybe this video won't be that long after all. Okay, Marathon is over here. And let me see, where is it? Weekly Marathon, there it is. Okay, so Marathon has 174 million shares outstanding. I think that's the most recent numbers that I have for them. I want to make sure. I've been updating a lot of numbers here recently. I just want to make sure I have the right numbers, 174. Okay, that was reported on their Q2 results. So, stock price is at $15.72 based on today's closing price. Market cap is at $2.7 billion right now. Their performance over the last 12 weeks has been really good from 12 weeks ago, even from 8 weeks ago. More recently here, the 12 weeks or the 4 weeks and the 1 week haven't been that great. But we've had a nice spike in the appreciation in the price, obviously, from 12 weeks ago. And it's just maybe we've had a rough patch here with Bitcoin miners in the last couple of weeks. Current hash rate that I have them at is 18.8. They're supposed to get to 24.3 roughly. And so they still have quite a bit of growth left in them. And I think they reported in the press release that they are at 23 something exahash right now. They're just waiting for energization of those miners, and they're saying it's supposed to be imminent from their providers there. Okay, BTC production or BTC HODL, 12,964. That's valued at 378 million right now. Definitely a large HODL position that we know of any of the miners. BTC production, you can see here that as of last year, they were at 72 Bitcoins per month. Went up in August a little bit. They had a rough patch last year where I think it was Mount Hardin facility, I believe it was that one, that went down because of a thunderstorm, and that hurt them quite a bit there. They sold that facility, I believe, and transitioned completely to being hosted by others. Okay, but you can see that the production is kind of like a roller coaster going up, but it is going up, so that's a good sign there. But we do have months where we're way up, then we come back down, we go way up, we come back down, and we've seen this before. Nonetheless, it is going in the right direction, always is going in the upwards direction. And BTC HODL has been increasing as well, which is good to see. They have been selling some of their BTC as well to fund operations, not to dilute as much. And then here's the last 4 quarters revenue. So Q3 from last year, 12.69 million, Q4, 28 million, Q1, 51 million, Q2, 81 million. Now, current quarter that we're in, I estimate them to be at 102 million based on the increases that they've had in hash rate. So definitely nice growth here that we've seen. Last 4 quarters operating costs, we can see that has also been increasing as they have been installing more and more miners. Their efficiency and everything else is still great, but the cost associated with having that many miners is definitely going to go up in price on that. So that's to be expected. This is almost 47% of their revenue right there is the cost of operating on those. Okay. Cost to mine 1 Bitcoin has come up as well to 18.87 thousand per Bitcoin. And that is mainly, I think, we've seen it increase in a lot of these miners. And I think that's just the network hash rate increasing on it. That's what we're seeing on that. They're a little bit higher than some of the other ones. And that's mainly because they have all of their miners hosted with somebody else. So there's electrical costs included in that, along with management fees, all that stuff that goes in with having your miners hosted with somebody else. Bitcoin mine quarterly has been increasing here steadily and nicely, going in the upwards direction, which is great to see as well. Debt to equity has come down to 1.28, which is good to see. That has been coming down. Current ratio is down a little bit to 14.9 from 16.2, but still really high. So no worries there, really. Total current assets have been increasing as well. Total current liabilities are increased a little bit here, but still mostly under 30 million. So that's pretty good there. Okay, so that's the numbers that we do have for them. Let's take a look at what we actually have as far as all that's being reported here. Cash and cash equivalents, which we like to look at, is at 113, so that's down from 124 million. Then we have also digital currencies. That has increased in value. Their HODL has increased as well, so that's 234 million compared to 189 million. So that's good there. let's see here. What else do we have here? That's kind of increased quite a bit. Other receivables increased to 759 million, I believe that's going to be. Yep. 759 other receivables. No, 759,000, sorry. And that was 172,000. Slight increase there, obviously. When we're looking at hundreds of millions of dollars, it's pretty small. That's 1%. Total current assets increased to 422 million from 386 million. So that's good there. Their prepaid expenses and other current assets went down to 51.7 from 60. And then total current assets is at 1.373 billion compared to 1.303 billion. So nice increase there. Current liabilities that we have for them is at 28.3 million. Not much, as we have some changes here. Let's see what's really changed here was the accounts payable went up to 7.1 from 3.2, and accrued expenses went up to 20.3 million from 17.7 million. That's an increase, but we had some decreases here in operating lease liabilities and current portion of accrued bond interest that has come down as well. So total liabilities now came in at 762 million compared to 758. That's not good. And then long-term liabilities, obviously the believe that's long-term liability. Oh, that's the total for this. Just getting myself mixed up here. So convertible notes obviously is the ones that they're due, I think, in the year 2026. At that point, they will be convertible, I think, through equity, through shares. So that's something that we have to keep an eye on, depending where the Bitcoin price goes, where the stock price goes, and everything else, depending how much they're going to have to dilute or basically shell out in convertible notes. Okay. Total liabilities and stockholder equity is at 1.373 billion compared to 1.303, so that's good there. Revenue here. Revenue, like I said, has increased nicely to 81.759 million. And I had them at, I should have looked at that earlier. I had them at 81.67, so I was off by 0.1%. Couldn't get better than that. Okay, almost right on the money on that one. And let's see, revenues. Then we have the cost of revenues, energy hosting, and other. That was 55.2 million. Cost of revenue minus depreciation and amortization was 37 million. So I'm guessing depreciation was 22. Yeah, something like that. Somewhere around there. Let's see what else do we have here. General administrative was 20 million compared to 15 million. I mean, I don't know how they increased that by almost 5 million here. Why that went up so much. What else do we have here? Payment of digital currencies is at 8.3 million compared to 6.1. Total operating expenses went up a little bit here. Operating income loss was 16.2 million compared to 3.8. Obviously, the general administrative going up 5 million. That was a big hit there. Let's see what else do we have here. That was way up. That 17.1, 18.9 operating income loss. So there's a difference there between those two. And then net loss was negative 19 million compared to negative 7. So definitely a much bigger hit there. And I believe if I did my math here right, and I'm double guessing myself right now, is cost of revenue minus depreciation and amortization. So this was their cost. So let me see here. If we take this minus this number, that would be the depreciation and amortization that we got, 17 million on it. And then over here, they had a negative loss of 13 cents total, basic and diluted. And if we take out the depreciation on it, I had them at negative 1 penny on it. And that's based on, let me see here. Let's take that number. We're taking, let me see here. Net loss, 39, and then we're adding back in depreciation and amortization, which was the 37 minus depreciation. So it should have been actually this number here. There we go. Okay. So that's the way those things worked out that way. So I should have been using that one. So there were 13 cents, the same thing. It doesn't really change much of a difference there, I think, for them. Double check my numbers here. See if I made this right. I'll have to double check this again later on. Like I said, I'm questioning this right now, whether I did this correctly or not. Okay, but that's it for Marathon. Looking up here on the numbers that we do have for them, we can see here that, let's see here, what do we have here as far as BTC minus depreciation, like I said, went up to 18.8. We talked about debt to equity, current ratios. You got the beta over here, enterprise value also in here, and price to book ratios. You got all that information as well as revenue, general administrative compensation. So that was at 25% of what they generated in revenue, which is down from the 30% they were at in Q1 but I'd still like to see that come down. Seems like the more they're making money, the more they're paying themselves, or I guess. So I'd like to see that come down as well, get it below 20% if possible. But that's it. I still think they're possibly right now, they are fairly valued at the current price that we see. Going forward, I would say that they are undervalued. My forward looking 12 months out is $20.30 to $30.45. And that's going to change from month to month depending on how much they actually generate in each month. So I think fairly valued currently based on the 4 quarters performance prior. If you go forward looking, definitely undervalued right now, in my opinion. Okay, let me know what you guys think of all this. As always, the spreadsheet is going to be available to my Patreon members. Thank you to everyone there for their continued support. That will get uploaded later tonight. I'll try and get these screenshots for you guys on YouTube members as well. I've been promising to get those done. I've just been busier than heck with all of these updates. So I hope you guys understand. And we'll see what happens tomorrow. I'm sure we're going to get a lot more updates as well. And another thing, I was a little surprised that Hut 8 still hasn't provided their production update. It's a little concerning. But we'll see. Maybe we'll get it sometime this week as well. Okay, that's it. Hope you guys enjoyed it. If you did, hit the like button, subscribe, helps me out tremendously, and I'll see you guys in the next one.